Bilingual investing, breaking investing barriers. Jay here with you guys today, presenting you guys with a brand new, fresh off the press educational video for you guys, for my community. I thank you so much for all the likes, all the support, all the newcomers, the new subscribers. Thank you, thank you, thank you, for forming part of our amazing community. And today's video theme, educational theme, is about, passive income, but more so about crypto staking. Okay, a lot of questions, Jay. What's crypto staking? How do I do it? Is it worth it? Things of that nature. So today's brief educational video is definitely going to help you guys understand and educate. Become educated with regards to crypto staking. So we're gonna discuss. So what is cryptocurrency staking? Yields and staking platforms, and then crypto staking equals passive income, guys. So immediately we start off. Well, before we start, guys, don't forget, again, if you haven't done so yet or already, don't forget to subscribe to our YouTube channel. It's just a click away right here. Click subscribe, click the notification bell to stay tuned for our fresh off the press educational videos just like this one, and also our informative videos, our crypto climate videos, which our community, you guys, love those videos. So guys, cryptocurrency consensus mechanisms help blockchains synchronize data, validate information, and process transactions. The two most popular mechanisms are proof of work, POW, and proof of stake, POS. So for proof of stake blockchains, basically blocks are creators are called validators. Participants must own coins or tokens to become a validator. They're energy efficient, security through community control, and validators receive transaction fees, as rewards. Where proof of work, like Bitcoin, block creators are called miners. Participants must buy equipment and energy to become a miner. Not energy efficient at all. Robust security due to expensive upfront requirement, and miners receive block rewards. So those are just, pros and cons, differences, and things of that nature from those two consensus mechanisms. So today we're going to focus on proof of stake, and that's where staking comes from, the rewards that you receive, by basically, as we're going to discuss here, your coins, giving your coins to the blockchain. So, and by doing so, you get rewarding, for that. So what is staking? Staking cryptocurrencies is a process that involves committing your crypto assets to support a blockchain network and confirm transactions. It allows, participants to earn rewards on their holdings. There's two main ways to earn passive income via crypto staking and or renting. By staking your coins directly via the coins platform or exchanges, which we're going to view an example of that, later on in the video, and then by renting or lending your coins out and obtaining rewards via a lending platform. So, staking and lending, sometimes they're correlated, but, they're two different things at the same time. So if you guys would like an educational video, strictly focusing on lending, let me know so that we can go ahead and actually, create that educational video, for you. Today, we're not going to really deep dive into the lending part. I am going to show an example, and we've shown examples in our past educational videos. So today we're going to briefly go over that, but today is more about, staking. But, there's staking versus renting. A lot of investors, choose either or do both as well, so we're going to actually go ahead and view briefly the lending example. As I've said, let's actually connect my wallet here. Let's see, it's a browser wallet, MetaMask. We have to actually change it over to here. Let's see, Ethereum mainnet. There we go. So refresh. Let's see. It doesn't want to work right now, but basically, we've been through this before, and I apologize for that. But it's Aave, just like in our previous educational video. You go in there and it gives you the percentages and the coins that you can decide, to go ahead and actually lend out, so you can borrow or lend out at different percentages. And again, we actually went through that example in a previous educational video when explaining DeFi. That does a little bit more of a deep dive, so you guys can actually look into that. The video is right here in our channel. Cryptocurrency: will DeFi become the future of banking? All right, so let's actually move on. Yields and staking platforms. So what is an investment return, ROI? A return is the financial gain or loss on an investment, which is typically expressed as the rate of change in the currency value of an investment over time. What are yields? A yield is the income. Okay, the income return on an investment, such as the interest received from holding an asset. The yield is usually expressed as an APY, or an annual percentage yield rate, based on the investment's cost and its fluctuating market value. So where are the best platforms to get yield from our cryptocurrency? There's plenty of platforms. Today we're just going to briefly overview PancakeSwap, but there's plenty of platforms that actually offer yield for your cryptocurrency. First of all, it's important to know that there are centralized staking platforms and decentralized staking platforms. These platforms offer different yield percentages based on different investment factors, such as risk base. So risk is an important component of the yield paid on an investment. The higher the risk, usually the higher the associated yield potential. Time base: how long will you stake or lend for? Type of stake: coins that are either locked or flexible. And then asset protection features: centralized exchanges protect your staked assets for you via their own platforms, while DEXs, or decentralized exchanges, use your self-custody wallet like MetaMask and or Trust Wallet, which are also examples that we gave on that DeFi educational video. So some crypto staking platforms examples are CRO, which is a centralized exchange, and PancakeSwap, which is a decentralized exchange, just to name a few. So again, we have let's see here, we have PancakeSwap. So I apologize, guys. It seems that these pages don't want to load, but we have CRO, which is the main example that we're going to focus on for now. Again, PancakeSwap uses your MetaMask. You can stake your coins on there. It's easy. In a future video, we're actually going to dive in deep, maybe even provide a PancakeSwap tutorial, or an Aave tutorial as well for you guys. Again, if you're interested in this type of educational content, then let me know in the comments down below, so that then we can actually prepare those educational videos for you. But again, this video is very simple. It's very basic. It's just a general overview of staking, where you would come in, you would log in, create an account. This is CRO. This is crypto.com. And again, this is not official financial advice. I'm not advising you to come over here, create an account, actually stake your coins. This is just for educational purposes only, so that you can understand that these type of platforms exist. You would have to do your own due diligence and your own research at your own convenience. So again, earn passive income with crypto. This is CRO. This is top 10 crypto assets by staking market cap, for example. Here, look, we're actually talking briefly about lending. Today we can see Aave is that #1 platform here. That it would take you to Aave and go through that, and then you have top 10 staking providers. These are centralized. And then you also have Cake DeFi. So you have a couple of decentralized. They actually say it there, decentralized, custodial, or centralized, and things of that nature. But just again, look, for example, if you want to stake Ethereum on CRO, you have Ethereum in your wallet. You're like, what? I want to earn 4%. As we can see here, it says the estimated reward you will earn per year, calculated with real-time blockchain data. So that would be about 4%, is most likely variable. Sometimes is at a specific, static percentage, and then sometimes is a dynamic, variable, volatile percentage based on market moves. So, in this case, you have a 4%. Here it says, staking ratio. So, not a lot of people are staking Ethereum here on this platform, but again, it tells you, the percentage moves, in the last 24 hours for the coin itself, the price, the coin name, and then you have the reward amount. So you would come out here, you would click on that, and then let's say you add your Ethereum, that on your Ethereum, you're going to probably earn about 4% APY, in a given year. So the same thing for Cardano, BNB chain, the percentages of rewards change per coin, but then basically you would come and stake your coins here. You would give your coins to the platform so that then they could, you basically provide those coins to the blockchain, and then you get rewarded, for doing so at a very basic level. That's what, staking is. So I definitely wanted to go through that brief example. So again, staking equals passive income. Why are yields in crypto staking so attractive? It's all about the passive income. Who wouldn't want to own assets that provide that essentially free passive income? I mean, I would, you probably would, right? Most of us would, but usually these type of environments, staking, things of that nature, do very well in a bull market because a lot of new income comes in, the price rises of the coin and the rewards rise too. So, in 2021, I did it, that was a great ride with that bull market and staking on, platforms like PancakeSwap and also lending on Aave. It was amazing. So, in bear markets, the rewards are pretty low. They're not that attractive, but there's still a percentage, so it's something to definitely keep in mind. Every investor would like the possibility of earning money without having to sacrifice their time for it. This type of passive income does not come without its risks, so it all comes down to determining if such risk would really be worth the reward. For some investors, instead of just hodling and having their funds sit in their wallets with no return is simply not good enough. They would prefer to have those still assets generating some type of yield at the passing of time. On the other hand, if the yield percentages are too low and the ROI doesn't seem worth it enough, then investors might just decide to hold off and just keep their coins inside their wallets nice and safe. So it all comes down and depends on each individual investor. Guys, if you enjoy this type of educational content, don't forget to subscribe if you haven't done so already. It's just a click away. You can also click the notification bell to stay tuned for our fresh off the press educational content. Guys, I would gladly appreciate it. In the link in the description down below, our website here, you can come over here. A lot of great tools and resources for you guys. So we saw our website, we saw the social networks. Again, this content is not official financial advice. It was created exclusively for educational purposes only. Thank you so much for your time and attention. Have a good one.